Hi, I'm Owen from Rask Australia. Thanks for tuning in to the Rask Network. Before we get into today's show, there are a few things we have to go over. Firstly, what you're about to hear and see is limited to general information only. It's not personal financial advice like you'd get from a financial planner. Also, it's important to remember that past performance is not indicative of future performance. That means that anything that's happened in the past, or we say today, is not necessarily going to reflect what happens in the future. Lastly, please consider that any of the guests or myself are featuring on this program may have a financial interest in some of the products or shares mentioned. That's enough from me. I hope you enjoyed today's program. Hey mate, welcome back to the show.
Hey, nice to be here.
Yeah, we are staring down the barrel of yet another calendar year of investing in hopefully fast-growing, high-quality companies. And we figured, why not give our listeners a cheat sheet on some companies and some industries that we find to be really exciting and really interesting. I think what we'll discover in this discussion of these three thematics or three themes is that it's kind of open-ended. There are companies in these industries that are still growing. There are some that dominate particular parts of it, but the industry itself is growing fast. What I would say is that if you have any questions, reach out to us on Twitter. We've got @7A Mahanti and myself @Owen Rask. You can find the links in the description for this episode. Just look down into your podcast player and you will find it there. Before we get into the three thematics, which I'm really excited about to talk about these three, can you just tell us, I know 7 Investing have the holiday sale still going. So tell us a little bit about this. What do people get if they go to the website and they use this particular coupon code?
Yeah, so 7 Investing is running a holiday promo. And the holiday promo, if you use the promo code HOLIDAY, then it gives you an annual subscription, $100 off your annual subscription. So the annual subscription is $399 per year, US. And if you use the holiday code, you get it for $299. But the cool part is that you can then lock in this $299 rate essentially into perpetuity as long as you remain a member. So it's $299 this year, or whenever you sign in. Then the next year when you come up for renewal, it's still $299, whether the rate at that time is $399 or $499 or whatever it is. If it's gone up, you still lock in this rate. It's just a way of saying, I think, thank you for being a loyal member. Thank you for being around. And what's the point of increasing the price for someone who has been around with you for some time? That's we're not going out and recruiting them again. So, we give them that saving. You get the saving for that. So I think that's the holiday promo. It's up until the 7th of January. 7 Investing. It's available until the 7th of January. Yeah. So yes, it's 7investing.com/subscribe and then use the code.
Yep, you can find the link in the show notes. Just don't forget to use the coupon code. I think that loyalty is really important because in finance, it's often the opposite. If you go and get car insurance, you get home insurance, you get anything, typically it's the loyal customers which pay more. They might give you a new shiny card for that year, but you end up paying more. So another hint is shop around. If your business is not like 7 Investing, shop around. So we're talking about 3 thematics. We were going to talk about 5, but we realized that's a lot and we could probably do an episode on each of these things. So we're just going to give you the high level kind of what the industry is, what's exciting about it, and then name some companies that you can chuck on your watch list. So the first one, and I'm going to lean heavily on you for this one, mate, because I know you've done a lot of work on this recently, which is cybersecurity. Just for people that are listening, if you do like Anirban's kind of dissection of this sector, please check out the show notes because there is a full webinar on this and it's free from 7 Investing. So go and check that out. You'll find the Zoom link in the description. So cybersecurity, mate, why is it interesting? What are some of the companies? Describe some of the technologies in this sector.
Yeah, so try to keep it at a high level. So number one thing to realize is we are increasingly connected, very digital, right? So whether you're booking a vaccine appointment or checking something online, doing banking, we do so many things online. That also means that bad actors have, found that online is a great way to actually, disrupt, cause havoc and things like that. So if you think about just, ransomware attacks and hacking that's going on, There are various estimates out there, but McAfee's research says that somewhere of the order of $1 trillion are impacted globally because of cyber crime, right? So cybersecurity is therefore very important, just not because of the economic loss, but because of the disruption and all the pain that it causes. Now, cybersecurity has been important for a long time, but I think the way enterprises and big businesses used to conduct their cybersecurity was they used to protect their IT assets. And that was because most of your IT assets used to sit in a data center in your office and in some cold room with a lot of air conditioning running, all your equipment is there. So you put, all these machines and firewalls and heavy equipment that basically prevents access. And the idea was basically a very age-old idea of, build a moat around your fort, right? So you've got a fort and you build a moat, and you assume that anybody inside the fort is basically approved or legal or allowed. Anybody outside the fort is potentially an offender or an intruder. So you don't want them in. So you only have special ways to access the fort or get into the fort or get into the office in this case. And that worked fine until sort of our way of working changed. And the way of working changes slowly. So we went to the cloud. So now applications are running in the cloud, whether they're private applications or, applications like the CRM, Salesforce CRM or whatever, or Workday and things like that, you're accessing them from the cloud. So that now you're protecting the fortress no longer works. That's one. The other thing is that people are accessing work in so many different ways, work from home, bringing your own device, different types of connections. So you really cannot provide secure connections all the way to all of these different devices at different places and times. So because we access things anytime, anywhere, using any device that we want to nowadays, right? So that has sort of changed the game in security. And that has resulted sort of in this new sort of trend towards what is known as a zero trust security framework. And the idea is that you don't, unlike in the previous world, where you trusted people inside your network and people outside are trust people have access, you basically say, well, the network is just a conduit for carrying information, and you want to basically make sure that the information that is passing through is secure, right? And so that's one level. When people are accessing, you want to make sure that they are the people that are accessing. So that's identity, right? So you want to secure the pipe end-to-end, assume that the pipe is end-to-end secure, encrypted and secure, but also just carrying information. You check them at the endpoints. You ensure that the endpoints that are accessing are trusted and have the identity that they have. And then you also still build a perimeter, but you build a perimeter using a software-defined technology instead of hardware, because you can't build a hardware perimeter. So I think of security as now layers, multiple layers that you put in to essentially ensure that your important data, your IT infrastructure, which is globally distributed now, is not impacted. So that's the trend. And when these sort of things happen, they allow sort of a change from the previous vanguards, who used to be basically point solution providers and providers of solution that is hardware solutions that used to sit in the data room of your office. Now that has all shifted. Those guys have a hard time sort of transitioning to a cloud-based world, but there are all these new players that are specifically focused on the cloud world. So that's sort of the high-level pitch. There's a paradigm shift happening. Is more important. Cybersecurity has a huge economic impact, and there are new gen companies that are taking advantage of the sea change and building new technologies that make our future more secure.
I think that's a fantastic overview. I think the kind of multiple players in this space, it's important to understand the architectures. I think the one company that I really like is Okta. It's a company that I own shares in. It's a really interesting business run by a great visionary CEO. I think the thing to keep in mind with a lot of these companies that we see today as industry leaders, in the past, they were thinking about this 5 or 10 years ago, right? And it's only now that this is happening. And so these people are often multiple years ahead in terms of where they see the industry going. And for me, I find a lot of comfort in hearing directly from these people when you dial into the quarterlies and those types of things. So just in summary there, which companies do you think maybe people should consider popping on their watch list?
Yeah, so there are a number of companies I think that are of interest. So one company that I think is very interesting, I think I know you like that company, is called Okta. OKTA is the code, I think listed on NASDAQ. This company does, right? For businesses and enterprises, and for customers of enterprises, right? So if you're Marriott and you want to manage the database of all your customers, how do you do that in a secure fashion? So they do things like two-factor authentication, managing access to all the apps that an enterprise might want to access and allow employees to access and things like that. That's an interesting company. If you're interested in sort of securing the pipe and making sure that everything that's going through the network pipe is secure, then there are two companies that's worth thinking about. There's a company called Zscaler. The code is ZS on NASDAQ. And that's a very, very interesting company, growing really quickly. There's another company called Cloudflare, which does a bunch of other things, but it's also very active in the security space. That's worth keeping an eye on. The code for that is NET, and that's listed on New York Stock Exchange. If you're interested in sort of the endpoint space, so where instead of running like a malware detection software on your computer or your iPhone or your iPad, you run their software, and then their software serves as a lightweight agent that basically talks with every other agent that is out there. Then there's a company called Crowdstrike that you can basically look at, which is sort of the modern version of how we used to do malware detection in the old, but this is more real time. Everything happens in a real time sort of fashion, or as close as real time. So in cybersecurity, one of the things that's big is, can you prevent what's known as a zero-day attack? So an attack that nobody has ever seen, or a malware that nobody's ever seen, and then machine learning technologies come into play, or at least in near real time, where it's happening in one part of the world, and that sort of information disseminates very quickly to other parts of the world.
There are so many companies in the sector that I think people can sometimes get confused if they're not technical professionals. But I think if you just start with this list of companies, so we've got Okta, Cloudflare, Crowdstrike, Zscaler. I think these companies, and if you jump onto that webinar that we just spoke about from Anirban, you're going to get the sense of which companies matter and which companies are leading this industry. And these are companies that are really sticky, deeply embedded businesses. So, all the standard metrics apply that we've spoken about in the past. So things like customer retention, customer growth, how much of that is each individual customer spending. These are all, SaaS metrics that we love to see in these businesses. And this is one of those sectors where it just keeps chugging along, just moving higher and higher. So some really interesting companies there. If you are interested in cybersecurity, we'd love to hear from you on Twitter. Just jump in and tell us what you think about these companies, or if there's something we're missing with any of these businesses. So you can find us on Twitter in the show notes. Please use those links. The second sector that we might talk about, and I'll keep it a little bit brief because it's a little bit, I guess, harder to invest in right now in a way that I think personally is in a way that aligns with what we've talked about on the show a lot. And this is basically the rise of Web3 and cryptocurrencies more broadly. So maybe we can just talk about, I guess, what the internet is, and that sets the scene for Web3. So typically, in the past, let's say in the early 90s, you would have gone to the internet and you would have seen a web page. You would have clicked with your mouse that was connected via a cable to your computer. It would have taken forever to load. You would have clicked, you might have read something like a web page or a blog or something of that description. And you, as a user of the internet in the early days, what you would see is basically a static page, a page where the person on the other end who has the server that serves your browser that information, basically just, they give you what they want to show you. That's the end of it. There's no interaction, basically. Then, Web 2.0 came along, and effectively what it meant was this is when the internet kind of hit its stride as we know it today, insofar as people were able to interact with the internet. And they were able to do that through forums, through social media platforms, through things like Zoom, like we see today. And basically what happened when we went from Web 1 to Web 2 is we saw a shift in it going from open protocols to then centralized, I guess, authority. So in this case, we're recording via Zoom. Zoom creates the software built on top of the internet, and it records the discussion, which then we put onto YouTube. YouTube centralizes that file and disperses it or distributes it to users across the internet as well. And this was a really fruitful time for entrepreneurs to innovate, because you could effectively build on top of something which was open and free for people to access. What we've seen more recently is the rise of Web3. And I know we've had a lot of comments on this from people like Vinod from the Equity Force. So he wants us to talk about this. So Web3 is basically the opposite happening. So it's an unwinding of that kind of centralization. So we hear about these terms called the blockchain, and basically the blockchain, if I could be so simplistic in my overview of it, it would be effectively taking away that source in the middle. So in this case, Zoom, or in Twitter, or anything like that, and creating an environment where people on the network support the network. And it's basically taking away that decentralization to an extent. It's important to say to an extent. And what the cryptocurrencies do, we have Ethereum, we have Bitcoin to a lesser extent, and we have other cryptocurrencies. What the cryptocurrencies do, and the best analogy of this is probably gas or petrol if you're in Australia, gas if you're in the United States, they basically fuel the network. So they provide the incentives for the nodes or the individual operators, the miners sometimes called, on that network to support the network. And what happens is effectively you have a blockchain, which is effectively a place, or not a place, it's a mechanism that basically ensures that the network agrees on things that are happening on that network at any one time. So typically, we just talked about cybersecurity. If we're sending this over Zoom, I have Zoom installed on my computer, which you might call an agent. I put the video feed goes into the agent, it encrypts it, it sends that message in ones and zeros through the internet to your computer through Zoom's servers, and it's de-encoded or unencoded on the other end, and then you can see what I'm doing, and no one can kind of intercept us. Basically, Zoom controls that process. On the blockchain, everyone can see what's happening, and at the same time, it is secure because you know that you're sending it to a certain person on the blockchain. They have their private and public keys, and they can access things. Now, the thing that I think has happened here is we've gone through that classic crossing the chasm type cycle where the cryptocurrencies had to be pumped up. So things like Bitcoin, Ethereum, Dogecoin, all of these seemingly crazy cryptocurrencies had to be pumped up to provide that early incentive for innovators on this new Web 3.0, this new internet. And basically what it means is that now there is an incentive for people to work on these public ledgers. So there is now an incentive for software engineers to move away from Web 2.0 and go to Web 3.0, because now they can see that there is a currency here. There is some type of incentive for me to operate on this network. And this is a really fascinating thing. And I've never seen this in my life. I don't know if you've seen this, mate, but basically the shift to Web3 is, in my mind, a huge, huge, huge thing. I don't know the implications for it. I'm still working my way through this. I think everyone goes through this period, what do they call it? Crypto curious. I'm not really fascinated at all by cryptocurrencies in themselves. I'm fascinated by the technology. And so there's a free course that you can do on MIT and on YouTube. So MIT OpenCourseWare, I'll put a link in the description. You can go, it's probably going to take you a few days, to be honest, to get through all of the lectures, but it's a university level discussion of blockchain technologies. It's not to do with cryptocurrencies, just to be clear. It's to do with blockchain technologies and how the cryptocurrencies kind of feed into that. And anyway, this traditionally, the way people are interacting with Web 3.0 through cryptocurrencies at the moment is they're going to something like Coinbase, which trades, I think I should know this off the top of my head. Is it on the NASDAQ, or is it it's on the NASDAQ under the ticker symbol COIN, coin. And typically people go to Coinbase, they get a digital wallet, if you like, a crypto wallet, and then they can buy and sell cryptocurrencies. That's typically the interaction a lot of people have with this. I think you can definitely go a lot further than that. For more advanced users, you can have your own keys, and you can go and you can just explore the blockchain for yourself. I think the thing to keep in mind here is just to keep your wits about you. There are people and actors out there that are very, very, very pro Bitcoin, pro Ethereum, pro this. And they typically start the conversation with, I'm a libertarian, buy Bitcoin. That's not a knock on that line of thinking. It's just more so that you have to understand their incentives for saying that. And so I think, for me personally, I've been on a journey with this for at least 6 months, maybe longer, maybe a few years, to be honest. I remember talking about it in 2017. And I'm now starting to realize the true power of the decentralization of these technologies. And I think NFTs, personally, I think it's a bit wild. I don't own any NFTs, and I'm not in the frame of mind to do that, to be honest. Just what's in an NFT straight off the bat, for those of you that are new to it. Well, a digital currency is just like our digital currency. You can go down to the cafe, spend $20. You give them a note. They give you a $10 in change. You can then take that $10 down to the next cafe, and that works down there. That's basically a cryptocurrency. An NFT would be a unique thing. So like a work of art that's only produced once and, has kind of, it's scarcity basically. And so I guess I don't know if you've dove into this much, mate, but what I would say is companies like Coinbase are definitely the picks and shovels play on this right now. I think that will change in time. There is an ETF in Australia currently on the market called CRYP that invests in the companies around the industry, like the infrastructure, the application layer, those types of businesses that support it. I guess the one implication I haven't fully got around yet is basically what happens to capitalism if Web 3.0 becomes a massive thing. I don't actually understand the true implications of that yet. All I know is the producer surplus. If you've done economics at university or at high school, you would know that there's basically consumer and producer surplus in the chart. And when friction is added or removed, something happens to either the producer, the supplier's surplus, and something happens to the consumer surplus. And the producer surplus seems to be getting ripped out of Web 3.0 from what I can tell. Maybe I've got that wrong. Let me know on Twitter. I don't know if you've done a deep dive into this yet, mate. I feel like you would have, and you would have some thoughts to add. But if you don't, maybe we can revisit it in 2022.
I don't know any basic thoughts. I'll just quickly say that, like I look at two things here. One is like crypto as the store of value for some people, right? So that's one angle. And then sort of blockchain or other technologies that basically are used for monetizing other things that you build. And the example I like to give is, if you think about the internet, then the internet developers actually made nothing off the internet, right? That's it, yeah. So the internet protocol developers made nothing off the internet. The people who made HTTP, so Tim Berners-Lee, made nothing off the internet really, but Facebook and Google and Apple and all did, right? So this is a way of saying that, well, if you develop an interesting technology and people build on top of that, then there is a way to monetize that. I don't know how far it goes. And I think the other thing, one thing this doesn't gel with is there are a lot of people who contribute ideas that help towards commercialization of things. And there's a difference between building something as a base layer that is not commercializable by itself, right? So academic research is a great example. People do academic research, they produce ideas. Those ideas then, multiple of those ideas merge together to create a commercializable product, right? Well, those academicians then maybe make some money off by consulting, or somebody wants them on some board or things like that, but they're not directly making the money. Or they could provide venture funds to companies like Google and things like that, right? So an algorithm by itself is, the PageRank algorithm, for example, by itself is an algorithm. Putting that to work, right? Multiple people have developed PageRank algorithms simultaneously, and which is the algorithm used by Google search, right? Like, so Professor Kleinberg is an example of a person who actually, had a paper published on that as well. But is he bitter that Google is making? I don't know. But I mean, I would say, as an academician, you'd be happy to see your work in action. So I think there is that angle. I think this is a little bit of Silicon Valley evangelism to some extent, that, we need to, empower this and empower that. So I don't know. I'm on the fence. I think the blockchain technology is interesting, but yeah, maybe this is a topic for 2022.
It is a topic for 2022. Just so people are fully aware, you don't have to have public blockchains. You can have private blockchains. They've been around for a while. Many companies are working on these. You can do semi-public kind of blockchains where there is some centralization. So don't get, bright-eyed and bushy-tailed by all the buzzwords, the NFTs, all that type of stuff. You don't have to own it. If you don't want to invest in this sector or this theme, you don't have to. And don't feel like you're missing out and you have to do anything, because I think investing is one of those things where, the grass can often look greener across the other side. But when you get across there, you're often too late, or something else, you realize you're out of your depth. If you are going to wade into the space at all, I would say just keep your wits about you. That's my first kind of disclaimer. The second thing is, make sure you understand what you're investing in. Go and do that MIT course. If you think this is the biggest thing since sliced bread, well, become an expert in it before you invest in it. That's the approach that I've taken. I haven't invested in any NFTs, any of that sort of stuff, because I just don't understand it well enough. I'm intrigued, but I don't understand it well enough. So I think the second one here doesn't really have too many takeaways, but you can study companies like Coinbase. You can go and create a wallet for yourself just to get a feel for it. You can look at cryptocurrencies like Ethereum. There are many others, so just go and check them out. The third sector that we want to talk about, and one that we've talked about a lot in 2021 because it's been a massive topic. We've had IPOs, we've had companies with $100 billion valuations with no revenue. It's been quite a wild ride, pun intended. So this is electric vehicles, or EVs for short. Mate, I'm going to hand it over to you. And I actually had a comment, as we're preparing for this episode to say, is Tesla still a buy? I think that's a question for a lot of people to digest after such a tremendous run over the past 5 years.
Yeah, so I think electric vehicles are now past the phase where I think electric vehicles are happening. They're going to be the majority of the sales of new vehicles in the future. Probably going to happen much faster than people think it's going to happen. Yet at the same time, we are still in the very early phases, right? So I reckon, I like to compare this with saying that, well, we're still probably in the iPhone 3, iPhone 4 stage, right? I mean, we're not yet in iPhone 13 or iPhone 14 stage. That is decades away. But we're in that very early growth stage still of where there's lots more electric vehicles sold. There's going to be other electric vehicles other than Tesla. There are other electric vehicles out there other than Teslas, although, in my opinion, right now, buying anything other than a Tesla is basically a waste of your funds. But sometimes you like another brand more than Tesla, and that's okay. So I think that's one side of the coin. So I think this is a secular growth area that we can agree and check box that. The other thing that is interesting is I think this can be a very high margin area just because of it allows for a change of business model, which has basically been pioneered by Tesla, right? So lower cost of servicing, fewer service visits, therefore you can make most of the margin on the car. And Tesla now is the highest gross margin mass scale automobile manufacturer, where you may assume a mass scale automobile manufacturer is a manufacturer which is producing at least 1 million vehicles a year. So Tesla is at that run rate. So that basically shows electric vehicles can actually be profitable, much more profitable than gas vehicles or internal combustion or ICE age vehicles are. Will that hold as you move downstream? That's a good question. Downstream is when you go downstream from a Model 3 to even cheaper model and things like that. Those are the question marks. Is it worthwhile to pay $100 billion or $80 billion for companies that have yet to produce anything? I don't know. I really don't know. I think it is a big question mark, a lot of leap of faith there. We've talked about this before. So is RIVN worth whatever it is worth today? It sold 11 vehicles or 12 vehicles, I think, in this quarter. So that's a lot of vehicles sold. They could have been handcrafted. It almost looks like, it's like the Bentley. So that, Lucid is there. I think what I would say is that, watch Tesla, but watch some of the Chinese manufacturers as well. So there's a company called NIO, XPENG. China is the largest electric vehicle market of the world right now. So they're a little farther ahead in the game. It's worth watching that. That's what I would say with electric vehicle. Is the other thing with electric vehicles is that there's other things that are happening. There are other things that are happening. So autonomy is probably going to happen. That's something interesting to keep an eye on. Then the other interesting thing to keep an eye on is electric vehicle infrastructure, right? So what's the gas pump equivalent, petrol pump equivalent for electric vehicles? And Tesla has its own, but there is an opportunity here for someone to have wide scale, or some couple of companies to actually. This is one thing in where I think you will not, duopoly or quadpoly or tripoly or something like that would actually be advantageous, because you do need scale, right? Yep. So this is something to watch as to the electrification and the petrol pump equivalents. What are those going to be? How well are they going to be integrated? How are they going to be connected technology-wise, and how well they can be used by the vehicle manufacturers? That's something to keep an eye on. The other thing I'll say is that For the traditional automakers, just watch their debt levels and think about the stranded asset problems. So they're, for a long time, the bear case that the bears love making is, well, the other guys are going to make the electric vehicles and just watch for competition. Now we know that it's not that simple. You can't take an existing factory or existing engine development line and turn that into a battery manufacturing line. It doesn't work that way. So that's something to keep an eye on. If those companies have a lot of debt, are they, what's going to happen to them? What else can I say quickly?
How do you think Waymo plays into this?
Waymo's had a lot of, movement of, I guess, executives, right? So did GM, Cruise division. So Waymo is, I think it is possible. Waymo has got some pilots and some approvals in some regions. I don't think Waymo's technology scales in terms of self-driving. So it's basically a fully mapped LiDAR-driven, very expensive equipment and fully mapped, limited area approach. I don't think that scales, but maybe that's the way to go, and maybe that's how you get more markets. Maybe, I don't know. My view of Alphabet's other bets division is that all the other bets are basically failures. Alphabet still is very much an advertising company, and it remains so. All the other bets are just other bets that are, they're in the skunk lab and have remained in the skunk lab, and they've turned off.
I feel like I need to defend my position.
Well, but whether it's Google Balloons or the balloons that they did, or the fiber optics that they were doing, or the Waymo that they're doing, the good news for Google is that it doesn't need those other bets. Its core business is just fine, and it's growing strong, and it's not an expensive stock. So that's the good news for it. And every big company thinks that they need to be in 5 different areas. They don't, which is the reality. They need to learn that lesson from Apple, which doesn't try to do multiple things. You need to focus. You need to pick a few bets and run with those. And if you're a big company, you can win on those few bets because you can hire the best, right? Instead of trying to spread yourself thin. So that's my view of Google. There's questions around, this is relevant for the SX. So mining companies, lithium, cobalt, and things like that, there's going to be strong demand for those. But, is there enough demand to come through? I don't know. I'm not a mining expert, but this is something we know, that there is a battery short supply still. So I'll stop there before answering your question.
Yeah, so there is a lot to go on in the EV sector. I think, like the other 2 sectors, it seems like it's a tangent, function in terms of learning curve. You start off steep and you just kind of keep going. But the reality is you've got to learn these base technologies in order to understand these industries, at least to be confident, even just, to converse in it. I think that's really important. So if you have any great resources on this, be sure to share them with us. You can head to 7 Investing to get Anirban's and the team's insights on these types of things, and you can watch all the videos too. So is Tesla still a buy? I think that's the question.
Tesla is still in my family's portfolio the largest holding. I did sell some because it had become uncomfortably large. Here's the thing: if Tesla can continue growing its output volume set, and their goal is to grow at 50% compounded over the next 10 years, it would probably be the largest automaker ×2 by then. And they are at that point where now they've made all the significant investments, a lot of significant investments in factory and development, and they're going to be in significant operating leverage mode now. There's going to be a lot of, it's cash flow positive, it's profitable, it has got a balance sheet that looks like a tech company, that doesn't look like an auto company, right? I mean, it has $15-16 billion of cash on the balance sheet. It's paid off most of its debt, and it's probably going to pay most of it off by the end of this year. The rating agencies have still not rated Tesla as this. It's still rated as a junk. They have not issued bonds because they're still rated as junk. But rating agencies are always behind the curve on these things. So and it's got a P. I wouldn't say Tesla is cheap, but Tesla is for a growth stock. It's probably the highest growth stock that you could own in among the big tech. If I'd say to people, if you don't own a position in Tesla, I look at Tesla now in my portfolio as Tesla is the new Apple in my portfolio. For the last decade, Apple has been like this cornerstone portfolio position that I've owned, that, blue chip company that I know is going to do well, and one that I can actually buy on drawdowns. I now give that position to Tesla and say, if it falls by 30%, because this is a company is an incredibly strong position right now, and they've got a lot of other things in the pipeline. So Tesla is not just a car company; it's an energy company, it's an AI company, and they've some of the best teams in some of these things that they're working on. So there's a lot of upside optionality as well. But I think Tesla is just cheap. If you're a long-term investor, if you're thinking 5-year horizons, 5-year timeframes, then Tesla is just cheap, just as an auto company. Everything else is an upside. And there's still a market debate, but the market debate has reduced to a large extent. Yeah, if I thought Tesla was overvalued, I would have reduced my position even further. But it's a 20% holding, 20% plus holding in a portfolio. I'm confident to hold it. Largely was, I understand the company, and B, I understand it's going to be volatile, but I do also realize that it's going to be significant. It's going to be a solid market beater over the long term, is my view. Of course, I could be wrong. I've been wrong in the past. I'll be wrong in the future. But yeah, and they've got Elon Musk, who is, I think, probably the best entrepreneur in the last 100 years that the world has seen. So
yeah, so that stands for something. So yeah, I think that's it. You just to our conversations we've had recently, if you own a company like Tesla, make sure you've got that thick skin. Make sure you're prepared for volatility, because it's a business that does have quite a polarizing debate around it, and that can lead to lots of buying, selling, sometimes really fast. 19 times sales last 12 months, but also growing in very, very strong double digits. So
the PE is 300 something.
Yeah, but that PE with operating leverage, which we know, with operating leverage, meaning revenue rising faster than costs, the PE, the profit in that PE ratio comes way down. So I think it's a really interesting business, and I'm so glad to get your updated thoughts on it. And if you want to, you can follow Anirban on Twitter at 7A Mahanti. I'll put links in the show notes. Ask him questions. He loves to talk about this company. I know so does Danielle Akuye, who I know you've spoken to before about this. And you can head to 7investing.com/subscribe. If you're going for an annual plan, don't forget that holiday coupon code to get $100 off, not only in 2022, but also 2023 and beyond. If you want to hear more from me, you can find me on Twitter at Owen Rask. I don't yet have a CryptoPunk as my display picture, maybe in 2022. And you can find me at rask.com.au. That's rask.com.au, where you'll also find more episodes of the Australian Investors Podcast. If you like this episode, be sure to hit subscribe, give us a thumbs up, leave us a review. We really don't have that many reviews, so please leave us a few more. I think they help. I don't know why. Maybe it's just an ego thing, but we definitely like them, and we love hearing from you. So, mate, as always, thanks for taking some time to join me on the show.
Oh, pleasure is always mine, Owen. Thank you for having me.